Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida Fair Tax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, February 14th, 2020. The income tax puts all of us on welfare. Now, nearly everyone reading the above title will wonder if that's really true, especially as it applies to them. The word welfare has come to mean payments from a government to people who are in need of assistance. Now, if you're not receiving food stamps or housing assistance payments, you probably don't think of yourself as being on welfare. However, thanks to the income payroll tax system, every American filing an income tax return or receiving Medicare is receiving welfare. Now, here are some examples. Let's look at Medicare first. Medicare recipients don't believe that they are receiving welfare because they paid into the Social Security Medicare system for many years, and they think they are just simply getting back what they contributed. Now, while it's true that in many cases people receive Social Security retirement benefits that are close to the amounts that they paid into the system, that is not true for Medicare. A Forbes article cited a study by the Urban Institute and concluded that a male earning an average wage over his lifetime will have paid $61,000 in Medicare taxes, but will receive $180,000 in benefits. A female earning the average wage will also have paid $61,000 into the system, but she will live longer and receive $207,000 in benefits. So according to the definition of welfare in the first paragraph, the government is providing a welfare payment to seniors on Medicare, as offensive as that may seem to many of us. Now let's look at people filing income tax returns. Governments don't create revenue on their own. A government must first extract the money it needs to operate from its constituents before it can use that money to pay for the services those constituents demand and require. Now, one way a government can provide a payment to its constituents is directly with a check or a certificate that can be exchanged for goods like food stamps. Another way of government providing a payment is by allowing one person to pay less income tax than another person. This is the way the government pays welfare to millions of us with the income tax. Here's some examples. Married people receive a higher standard deduction and pay taxes on income at a lower percentage rate than single people earning the same amount of income. People with lower incomes pay income taxes at a lower rate than people with higher incomes. 10% of federal taxpayers with home mortgage interest, state and local taxes, and charitable contributions that add up to more than the standard deduction can itemize those deductions and reduce their taxable income even further. Families earning less than $500,000 per year and who have children under the age of 16 receive a $2,000 credit against their taxes for each child, but of course people with no children under 16 don't get that credit. Interest paid on personal loans is not deductible, but a taxpayer can reduce his or her taxable income by up to $2,500 of student loan interest. Owners of an historic building receive a tax credit of 20% of the renovations. Small businesses can reduce their taxable income by 20% of their income. Businesses purchasing a vehicle can reduce their taxable income by $10,000 of the cost of the vehicle for the first year, up to $16,000 for the second year, and up to $9,600 for the third year. Individuals cannot deduct the cost of acquiring their vehicles at all and must pay for them with the net remaining after deductions for income payroll taxes. Businesses purchasing equipment can normally qualify to deduct the full cost of the equipment and reduce their taxable income, thereby providing more income that can be distributed to the owners. Now, in each of these examples, and there are literally thousands more, some taxpayers can reduce their federal income tax more than other non-similarly situated taxpayers. This means that they are paying less income tax than other people making the same income. Now, although it's not entirely true today because of the U.S. government's ability and willingness to finance spending by increasing the public debt, generally you fund government spending through taxes. Now, this means that if I'm allowed to pay less in income tax, someone else will have to pay more. In conclusion, few people would disagree with George Bernard Shaw's statement, "A government that robs Peter to pay Paul can always count on Paul's support." The ruling class and their minions in Congress have worked really hard to make each of us believe that thanks to them, we're getting something that others aren't, and that we should be very grateful to them for that. In fact, they regularly tell us that if we're not appropriately grateful, they will punish us by taking away some of these deductions and credits that allow us to pay less in income tax. This means that we will have less income to meet our needs, and that's frightening. And that's one of the primary reasons we're supposed to be afraid of repealing the income tax system. But like most things the ruling class tells us, that is just not true. Let's look at what the fair tax does. The fair tax raises revenue for the government in the simplest and most transparent manner possible. It provides the prebate tax credit to all households based on household size and actually allows lower and middle income families to pay less in taxes than they do now. The fair tax allows American businesses to be more competitive in the world market and for U.S. prices to be reduced by at least 10%. The fair tax does not favor the purchase of one new good over another, a favor that is normally bought and paid for by an industry. It greatly reduces the ability of Congress and lobbyists to extort money by selling tax benefits. The fair tax makes it much harder to single out certain groups and threaten to raise their taxes if they don't behave. With the fair tax, there is only one rate, and any increase would apply to everyone. The fair tax will grow the economy at an amazingly rapid rate and will create and protect American jobs and workers. And finally, the fair tax ensures the sustainability of Social Security and Medicare and takes away the ruling class's ability to control seniors. The income payroll tax system allows the ruling class to instruct the bureaucrats and members of Congress to reward some groups and punish others. Now, the fair tax doesn't eliminate the ability to make changes, but it does make any changes apparent to everyone, and that in turn can make those changes much more difficult to enact. The ruling class is actually made up of cowards that know they can only control people if they can operate behind the curtain. The fair tax exposes them, and this is very frightening to any group of despots who fear the revolt of their subjects. Now, it's helpful to recall the words of Alexander Hamilton, who, writing under the name of Publius, wrote the following in the Federalist Papers 21. "There's no method of steering clear of this inconvenience but by authorizing the national government to raise its own revenues in its own way. Imposts, excises, and in general, all duties upon articles of consumption may be compared to a fluid which will, in time, find its level with the means of paying them. The amount to be contributed by each citizen will be in a degree at his own option and can be regulated by an attention to his resources. The rich may be extravagant, the poor can be frugal, and private oppression may always be avoided by a judicious selection of objects proper for such impositions. If inequality should arise in some states from duties on particular objects, these will, in all probability, be counterbalanced by proportional inequalities in other states from the duties on other objects. In the course of time and things, an equilibrium, as far as it is attainable in so complicated a subject, will be established everywhere. Or, if inequalities should still exist, they would neither be so great in their degree, so uniform in their operation, nor so odious in their appearance, that those with which would necessarily spring from quotas upon any scale can possibly be devised. It's a single advantage of taxes and articles on consumption that they contain in their own nature a security against excess. They prescribe their own limit, which cannot be exceeded without defeating the end proposed, that is, an extension of the revenue. When applied to this object, the saying is as just as it is witty, that in political arithmetic, 2 and 2 do not always add up to 4. If duties are too high, they lessen the consumption, the collection is eluded, and the product to the Treasury is not so great as when they are confined within proper and moderate bounds. This forms a complete barrier against any material oppression of the citizens by taxes of this class, and is itself a natural limitation of the power of imposing them." End of quote. Now, has anything changed in the past 230 plus years that make Hamilton's words any less applicable to the present United States? The answer to that is a resounding no. Hamilton's comments are just as true and just as appropriate today as they were when he wrote them. Now, although he might object to the amount of fair tax necessary to feed today's bloated federal government, Hamilton and the other founders of our great nation would rise as one and demand that we adopt the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.